Byron Lotter from Vestec. Byron, good to have you on the show again.
Hi, David. Where's Nazipa? I thought.
Well, I'm sorry to disappoint you. You have to put up with
the
me.
The whole reason I was coming was to see her.
She had more important things to do, obviously.
MTN.
Yesterday, when we saw that number of a 20% drop in headline earnings, I mean, I don't know if they've ever reported a drop like that in earnings since their founding in the mid-90s. These big phone companies like Vodacom, MTN, I mean, they've just been growth. Maybe the growth has been less spectacular in some years, but 20% drop in earnings. And it was linked to the disconnections, and the fine, of course, was for the disconnections which it hadn't done when it should have. So it's all linked up with that Nigerian story. But an 18% punishment on the day.
Because obviously we saw Vodacom's numbers a few weeks before, and they showed solid growth, especially on the data side. So obviously this is a company-specific issue and also a regional specific. So obviously I think more predominantly in Nigeria. I think when the results do come out, we're going to get more details into that. But I think the market probably forgot that obviously the whole fine was based around 5 million subscribers that were supposed to be disconnected and weren't. So obviously during the negotiations, I'm pretty sure MTN would have gone ahead and disconnected those 5 million subscribers. Otherwise, their sort of backing behind the argument, would have fallen short.
But can't they reconnect them? I mean, isn't that...
Well, they can reconnect them if they reconnect them properly. But, these are people living in rural areas. They need fingerprints, photos. It's pretty difficult. I'm pretty sure the admin and behind it all is pretty tough. So it's not just as simple as reconnecting them once you get all those relevant documents. So it's a long process, and obviously these are fee-paying clients that they have now lost. But also, I think maybe possibly keeping their eye off the ball a little bit, focusing on one thing and, other parts going missing. I think last week, or actually beginning of this week, myself and a few colleagues and a lot of people I spoke to had no data connection for about 8 hours. And one of my friends phoned them, and apparently something went wrong, and they had engineers working on it, which they always do. So, there are
technicians are attending to the problem.
Exactly. So there are certain service issues, but it's tough. And I think Patuma and Klecho, this is probably the toughest period in his 15-odd years at MTN, and it'll be interesting to see how he deals with it.
Well, let's bring in Thabi Leoka now from Argon Asset Management. She's an economic strategist there. So we're not asking you to go into the mechanics of the companies, Thabi, but you must also have a sort of bird's-eye view of these issues. Hasn't it been interesting the way MTN has dealt with this issue in Nigeria? And we're talking bigger relations, economic relations between the countries. It's clearly been discussed at a political level. There's talk now as well. I saw a news item just this afternoon saying MTN's expecting a reasonable fine. So what's your view of this?
I just think it's very interesting the way it has evolved since the big fine initially, and then the changes on the fine, and then the legal implication, and then also the fact that MTN has taken it not out of the budget in terms of its South Africa, but it's almost isolated it to Nigeria. So it's almost like an MTN Nigeria problem rather than an MTN problem. So it's MTN Nigeria has to sort it out. So in terms of Nigeria-South African relations, it's also been quite interesting because we've been very competitive, the two countries, and you also want to have good relations with Nigeria. We don't want this label that we've had in the past of being bullies. And then suddenly, you have this MTN saga, and if you talk to investors, the first thing that they ask is it a political situation? Is there competition between the two countries? And this is something that I guess from a South African perspective, you don't want to try to fuel that rivalry.
One suspects also, I mean, they could have sorted this fine out pretty quickly. They could have made a decision on it a long time ago. It's almost like they're spinning it out to teach you a lesson.
Yeah, but I mean, the amount of the fine was absolutely ridiculous. So it makes sense for MTN to fight this tooth and nail. But I think where the big risk lies now is because MTN operates in quite a few territories that are under huge fiscal pressure. And they're obviously a big, profitable business, and shareholders want them to be big and profitable, and they're fulfilling a big and vital service. But now they're a soft target for these fiscally pressured countries to, implement fines, just find little ways to try and get money out of them.
Got to be careful not to kill the golden goose, though. Make it so
That's
difficult for
true.
them they can't make money.
Yeah, because also when the fine, especially the fine was initially announced, it was the market, and there were rumors about it being a revenue collecting mechanism because of oil prices going down. And I think that's from a Nigeria perspective, they needed to manage that well, because they, it's not good for the government to seem to be trying to squeeze a company that's been performing really well, relatively well in Nigeria, and in order to fund their falling fiscal situation.
It reminds me of the allegations made against some of the traffic police in South Africa. They're saying they're not interested in road safety, they're interested in revenue from fines, because that's where the municipalities get a lot of revenue from.
Well, that fine, $5.1 billion, is the same magnitude as the fine that Goldman Sachs received for their part in the mortgage-backed securities financial crisis.
Yeah.
So they almost collapsed the entire U.S. economy. Obviously, they were a part of the puzzle, but it's the same size. And you feel for not recurring 5 million subscribers, it doesn't really...
Although they had a calculation. They said there were so many subscribers and we're charging you so many dollars per subscriber, so they kind of justified. Then they said, we'll change it. We'll put it down to 3.9. Then they gave it to the president. Maybe he'll make up his mind. So the uncertainty remains. But let's go now to a commodity, gold, which is back in fashion. Gold Fields is looking to break even at its South Deep mine by the end of the year. And this week, CNBC Africa's Open Exchange program spoke to the Gold Fields Chief Executive, Nick Holland.
I don't think it's so much a function of all the gold being gone. I think it's more of a function of the cost of actually getting it out the ground and the cost of processing it. We've done some studies that indicate that if you look at the average grade that's being mined in the gold industry today, it's just over a gram a ton. Now, 20 years ago, that used to be 5 grams a ton. Now, we looked at the inventory of what miners in the gold industry are likely to mine over the next 25 years when the current generation of mines are gone, and it drops about 20% to about 0.82 grams. In addition, the cost of actually processing is going to increase because it's not as easy, it's harder, there are more elements in it that have to be separated in the processing side of things. So, yeah, I think the cost is going to go up. And that tells you that if you believe in supply-demand, that will drive the gold price in the long term, then costs are going to go up as supply, and it has to feed through eventually into the gold price.
Nick Holland over there. I think there are two issues here. The one is Gold Fields as a company, which, as we said, South Deep, when was it going to come on stream? When was it going to start? And it seems to now beginning to deliver. But elsewhere, the company battled. But let's start with you, Thabi, on gold generally. From an economic point of view, it's back in fashion. I don't know if anyone's researched this, but it would be interesting to see it. For how long a period in the past, if ever, has the gold price been so far above the platinum price? Would be interesting. 1,200 to 900 sustainably. I'm not asking you to answer, but it's an interesting one.
It would be interesting. As an economist, mining has always been, difficult and interesting, because mining production has always been different to the way companies perform. And mining production in South Africa, if you look at mining production, is actually not doing very well. Numbers are quite negative. Also speaking to our labor market and the difficulty of the sector. And yet, suddenly, you have gold increasing, the price of gold increasing as a percentage, especially compared to other minerals that we produce. So it's quite interesting to see what is actually happening in terms of the production side of it and the price side of the mineral.
The guys in the investment world will not touch gold companies or gold, and there are others that are, as they call them, the gold bugs. Where do you sit with this?
Well, I think the most disappointing thing about that interview was Nick Holland's suit. I mean, it was black. Normally it's either bright purple or
or
green.
pink.
It's obviously in a glum mood, even though, the gold price is looking on the up. I mean, he painted that picture there, and it looks pretty tough as a producer. We avoid gold like the plague. It's very hard to understand. It's almost a self-fulfilling prophecy in terms of price, because, the only real use for it is for jewelry. So the sort of flight to safety is, engraved in our brains over years of history.
Seems to work. Seems to work.
Not really, though. I mean, during times of sort of uncertainty since the financial crisis, we haven't really seen gold performing that well. Only recently now it's picked up. and also on the back of a very weak rand for the local producers. We've seen those gold stocks shoot up. But it's too speculative, too volatile, and not investment grade.
Now, what was interesting, Thabi, sorry, just to take you back to the interview, was that Tumi asked him the question about what happens when the gold is finished. And it's difficult to imagine, but it must run out, or what's left will become just too expensive to mine. And in other words, there'd be no new production. So whatever gold is on the earth out of the ground is all we've got.
That's very true. I mean, we have about between 30 to 50 years of gold left. And also the usage of gold globally is also diminishing. And so it's not just on jewelry, but gold historically tended to increase towards the end of the year. And that's in line with Diwali Indian celebration. And now, even in India, they're replacing gold with platinum because of the cost, the price of gold versus the price of platinum. And also things like, I know this is maybe minute, but gold tooth. Used to also increase increase the demand for gold, and now you don't even have that. So just from the jewelry perspective, from the usage of gold, it's actually diminishing versus platinum, which is an industrial metal, and that seems to obviously be in demand, and the demand will slow down, but it won't diminish in the same way as gold is falling quickly.
Well, certainly the gold bugs have taken some satisfaction out of what's happened. Another big company that was reporting this week was Comair, and they've had interesting issues with, of course, the oil price and the weak rand. On the one hand, the price was very favorable. On the other hand, the weak rand cancelled out much of the effect of that. And we spoke to the Comair CEO, Eric Venter.
The real impact has been that with a huge drop in the oil price and the kind of super profits we're seeing with European and American carriers because of the benefit in the oil price, we're just not seeing that because the rand has just offset that drop in the oil price. And I think we dropped, once we got to about $80 a barrel, we never saw any rand benefit beyond that because beyond $80 a barrel, the exchange rate was really offsetting the dollar price. So that's been the lost opportunity of where we could have been if the rand had not depreciated. The short answer, of course, is 91 million rand, because that was what hit our income statement on 31 December. But that's just the effect of the exchange rate on one day in the year. It could all reverse out again. The loan is for another 7 years, so who knows what happens in the next 7 years. It's a non-cash flow item. So in reality, it's an accounting adjustment to reflect the current exchange rate.
We did ask Eric Venter about that paper that came out on governance of the state-owned enterprises after the State of the Nation address. And the way that's phrased, SAA could be up for sale. That's implied because it says state-owned entities that are not performing could be sold off. Is that going to happen, or is this just making nice noises?
I think it will, but it will take some time. I think it was good on the government to actually start being real about or take the performance of our state-owned enterprises quite seriously, because they have been underperforming for some time. PRASA, Sanral, SOE, and we've come to a point where the National Treasury cannot find money to save these entities. Last year, just under 30 billion rands was injected equity injection into SAA. We simply don't have any amount to give this year and the coming years. So I think that we could see SAA, maybe, I think we could be creative about it. We could do what Telkom did, and it turned around Telkom, listing it, partly listing it, privatizing it. So it doesn't have to be something that will be difficult to do and politically sensitive, because you don't want a situation where you have to now reduce employment because you are you're privatizing it, and privatization often leads to reduction in labor.
Comair, from the company point of view, I mean, it's done so well over the years, been a consistent deliverer for shareholders.
Yeah, they're operating in a very tough environment. Nice to see in the commentary that passengers were growing, people obviously traveling around South Africa more. Probably a lot of internal tourism, because people can't really go overseas, they can't really afford it. Also, another interesting stat was that they use 17 million litres of fuel a month. And that's about 33% of their overall costs. And when they bring in the new planes, those planes use about 7% less fuel than the older ones. So it certainly makes sense to bring in those new planes. But they've also been waiting on the airports, I forget the acronym, AXA. They're supposed to be halving the prices of, the operating within the airports, and they're sitting and waiting for this, and this will, really be good for their margins, but it's just not happening. So it's a very tough environment, and they're competing against a state-owned entity that has, a lot of, not unlimited, but a lot of funding.
Well, they think it's unlimited, the way they behave. We're going to be shifting focus onto the economic data after this. That's in our Macro Matters section. Thabi and Byron both staying for that, so see you in a moment.
Over the years, we've helped businesses lower cost and increase productivity through world-class voice, connectivity, video and broadband services in South Africa and around the world.
The 2016 Standard Bank West Africa Investors Conference provides a unique opportunity to investors to get first-hand information on their current and prospective investments in the region's major markets.
We expect that investors from Nigeria and from outside Nigeria will be meeting with both listed and non-listed companies in Nigeria.
Delegates also get a unique opportunity to interact with members of Nigeria's new government and key policymakers and better appreciate the policies designed to boost growth and diversify Africa's largest economy away from oil. Don't miss the 2016 Standard Bank West Africa Investors Conference from the 23rd to the 25th of February.
There's so much to talk about. The point is you've got no information.
The South African market has gone absolutely crazy over the last 2 days.
There are people with huge amounts of cash.
Now the country still is rich and has so much to offer. And we haven't even grown, I don't know, have we grown 2% a year for the last 20 years?
What you're saying is that we've got everything in our favour now and we're messing it up.
Business FM, every Friday night, only on CNBC Africa.
At Neotel, we continue to challenge the status quo and make communications simpler for our customers.